Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch this week. I'm Ndawleng Lechela, and joining me to unpack your stock-related questions today via Zoom is Chantal Marx from FNB Wealth and Investments and Kearabilwe Nonyana from Prime XBT. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Kia, Chantal, thanks so much for joining me this afternoon. Let's start off with what we've been seeing playing out in markets. Equity markets kicking off Q4 while with traders pricing in more rate cuts, even as we deal with that U.S. government shutdown, resulting in no U.S. non-farm payrolls. I asked Gia earlier this week, so I'll direct the question to you, Chantal. Are the ADP numbers enough to inform policymakers about the health of the labor market?
Well, I think it gives you some clues, but it really isn't enough to give you a full sense. And I mean, this is private survey data. I think what's happening in terms of the federal government shutdown will also be important. We don't know how many layoffs we are going to get that become permanent. We know the workers are being furloughed right now, but the Trump administration has signaled that it could use this as an opportunity for further permanent layoffs. So you really do need that data as well. And I think that when you look at the Department of, or the Labor Bureau's numbers that they put out, it really does paint a very full picture of what's happening in the labor market. I mean, at the moment, there's just limited information.
And you know, despite that, we are seeing markets really charging ahead on all fronts, your US markets, European markets, as well as back here at home. And just looking at market performance over the third quarter, yeah, really strong as well. Stateside, we're still seeing the tech counters like Nvidia boosting markets. Here at home, gold and PGM prices supporting the JSE. Just your reflections on market resilience we've seen so far, as well as what you'll be looking out for as you know, we're in Q4.
You know, I was reading a report earlier on this week, and it was speaking about maybe these new valuations are the new normal. And what they mean by that is that they were looking at median PEs and essentially the progression in median PEs since the 1950s. And essentially the market's PE, what I'm speaking about, the market I'm talking about, S&P 500, has essentially found a median higher than it was about in 2008. So what that tells you is, truly speaking, this is probably one of the easiest times to be a financial markets practitioner, because you could just simply tell your clients to buy the market and it'll probably do well. But what is really quite concerning for me right now is all the risk metrics, so the safe haven assets such as gold, are doing well in an environment where the market is doing well. So how are they still seen as safe havens and essentially risk showers? So I'm also quite concerned about these valuations in the equity market, while there's still so much social and geopolitical risk within the system. I think Q3 was going to do well, and I was looking at a stat that says 75% of the time since the 1970s, Q4 has been an up month for the has been an up quarter for the S&P 500 as well. So you to bet on the fact that it will continue, probably you will.
And what have you made of, you know, the performance we've been seeing in markets so far, Chantal? Gia mentioned something interesting there, where we are seeing equity markets and safe haven assets charging ahead at the same time.
Yeah, and he also mentioned that valuation mean has really shifted since 2008. And what happened in 2008 was basically the start of the global financial crisis and loads of excess liquidity in the market. So I do think that the momentum that we're seeing right now could be driven by excess liquidity to a certain extent, and also a bit of irrational exuberance. The whole tech rally, I think, has been notable, and yes, there's reason for that optimism and excitement because it's a major thematic, but it just doesn't seem, it can't go on forever this way. At some point, you're going to have to see a leveling out of valuations and allow some of those valuations to unwind, either by the market going down or by earnings going up more than what we're expecting at the moment. So, yeah, I mean, I'm nervy to say you don't want to be in markets right now because momentum is an extremely powerful force. No one has blinked just yet. But I think it's very important to maybe think about opportunities where we haven't seen those rallies come through yet. The local market's a really good example, right? It's been gold, PGMs, NASDAQ process. So perhaps it's time to start thinking about diversifying into the SA Inc. space, for example, where we've seen a lag. And the same will be true in global markets generally.
And let's get into some of those questions. And starting off with the JSE, what we've been seeing playing out there. There's been a question here on just what you spoke about, Chantal, on where you're seeing value when it comes to SA Inc. stocks outside of your PGM counters, your gold counters, as well as NASPAs and process. I'll start with you, Chantal.
Yeah, I mean, so the SA Inc. space certainly looks attractive to me at current levels. And I think if you're a longer term investor, it could be a really good opportunity to get exposure to high quality retailers at the moment. I mean, if you look at a company like Shoprite, it's gone absolutely nowhere over the last year. So at the same time, they've grown earnings by a very strong margin, and the expectation is that that will persist. So that tells us that Shoprite's become cheaper. There are many examples like that, Pepkor, Mr. Price, TFG, the list goes on. And I think even in the manufacturing space, kind of the less kind of sexy businesses, there's so much value in the South African market. And it's confirmed by the fact that we are seeing so much corporate activity at the moment, so many delistings because companies are being bought out. They're cheap. So I think the opportunity is to be in there, get in there, wait for it to re-rate, or potentially wait for some of these smaller businesses to be taken out.
And there is a question on one of the smaller players, CA Sales. Is it a hold or a sell? The viewer pointing out that Botswana's GDP shrank in Q2, also pointing out that Botswana contributes half of the group's profits. Kia, is that one you look at?
And not at all, to be perfectly honest, and maybe Chantal has something to say on it.
All right, Chantal.
Yeah, so we actually looked at it pretty recently because they made a sizable acquisition in Kenya, and they've also made a sizable acquisition in South Africa. And that speaks to the pressure that we're seeing in the Botswanan market at the moment. They are also looking to diversify. I think what they do exceptionally well, and they do it very efficiently. It is a business that we like. And I think I think it's going to go from strength to strength, and really start getting kind of mainstream attention pretty soon. It started as kind of a fast-moving consumer goods distributor in Botswana, but now with a sizable footprint elsewhere.
All right, let's move over to the tech sector. On the chip makers in particular, viewer asking for analysis on the increased partnerships and deal-making activity we're seeing in the space, and asking for your views on the winners and losers in that sector, Kia.
Yeah, I mean, I think right now, if you had to say, there's probably more winners than losers in that sector. And truly speaking, when you're looking at the amount of capex, I mean, I'll just take something that is close to home, such as NASPAS, and what I'm speaking about is Tencent. If you're looking at Tencent's capex spend just on AI right now, it's quite incredible. And looking across the space about the amount of money which is being piled in, even in the private sector, not just listed, it's really just going to show that this sector is still seen as one that's going to continue growing in the near future. I mean, recently I was looking at ASML and looking at the last earnings call, and essentially the CEO was speaking of the fact that they had to curtail the outlook, but that curtailment in outlook was just purely at the level of they did not know where tariffs are going to go. So across the space, you find the Nvidias, you're finding the Tencents, you're finding the TSMCs, all winners in the space. If you're really going to be trying to find losers in the space, you're probably going to get burnt, and you're going to get burnt hard because there's a lot of money which is really flying around in the sector.
And what's also been interesting that's been playing out in that space as AI infrastructure grows, there's been increased interest in the memory chip makers. This week we saw SK Hynix as well as Samsung securing contracts with OpenAI. Which counters are you eyeing on that front, Chantal?
Yeah, I mean, it's actually so difficult to say because you don't know where the next deal activity is going to come from.
Yeah.
I think if you look at a company like Samsung, it's pretty well diversified, but you're also buying a phone maker and a display maker. So you need to kind of go with the cycle that's related to that as well. But yeah, I mean, I think that across the semiconductor space, most of these companies have a use case. Some of them, I think, were earlier winners and will probably remain long-term winners at, well, let's say long-term 5 to 10-year winners like NVIDIA. But the valuation then looks perhaps a little bit on the stretched side. I think AMD is a really interesting business. Broadcom is a very interesting business. But you're going to struggle to find these at cheap valuations. So you kind of need to pick your poison, perhaps diversify around it. And yeah, I mean, just one of them will end up being the winner, or all of them will.
And moving over to another sector, the pharma stocks, those 100% tariffs not coming into effect, which were supposed to come into effect on the 1st, but that not happening. And there's been so much at play in that sector. President Trump cutting a deal with Pfizer on prescription drug prices. There was also the announcement of the Trump RX website. And a viewer asking if the rally we saw this week, whether that rally is sustainable.
To be perfectly honest, I don't like to be in sectors which have the eye of the government and regulation in the near future. But I was looking at Johnson & Johnson just a couple of hours ago, and it was sitting at 52-week highs. And when you find quality pharma stocks, I find that their geographical diversification essentially gets to be able to de-risk some of that regulatory hurdle. And I mean, Johnson & Johnson, for me, the Pfizer's, which essentially are going to return production home, as Donald Trump says. These are companies which really have the ear of the US president. So sometimes even in regulation, you'd like to be close to politicians. Do I think the rally is going to carry on? I think it might just carry on at the moment, because when you look at the valuations, I don't think they're very stretched in terms of the earnings which they have produced. And I was just, as I said, looking at Johnson & Johnson, and I just thought to myself, this is really a good counter.
So Chantal, are you dipping your fingers into those stocks? Do you hold any of them at the moment? There's also been increased interest in the counters that produce the GLP drugs, in particular your Novo Nordisk, your Eli Lilly's.
Yeah, so I mean, I think that that pharma stocks are an excellent diversifier in a portfolio because they don't really move along with anything else. But you get, again, your winners and losers in that space. And I think at the moment, the winners are these GLP-1 drug manufacturers, although Novo has been under so much pressure this year. So I think that there is probably opportunity there, but it is risky at the moment, just because of that competitive pressure coming through from Eli Lilly and the rest. So I think my suggestion is always to perhaps maybe pick a few of them for your portfolio. Let's see, maybe look at the different therapies and the different areas to which they're exposed. And diversify it that way as well. But yeah, an excellent diversifier. It's not tech, right? It's not going to be astronomical gains through the cycle. But yeah, you get your proper winners there as well.
Before we move on to the next question, Gia, let's get your take on these GLP-1 drug makers, Novo or Eli Lilly?
Go for Eli Lilly, because Novo Nordisk has been in so much pressure. I mean, I think if you've held it in your portfolio, you would have generally not really really been happy. So if I had to take my pick, I'd take Eli Lilly.
Okay, let's shift focus now to the local property sector. A viewer here asking what are the merits or otherwise of Equitas. The company is solvent, has great properties, but is going nowhere. Why, Chantal?
Well, there's been a little bit of a trust issue with the management team. And the biggest thing was just that they moved very heavily and enthusiastically into the UK market. And then a couple of years ago, they made a drastic U-turn on that investment. And I think that shareholders were quite disappointed that they were kind of caught off guard around this sudden change of strategy. And then they actually had to start exiting those US assets, those UK assets. And I think that the fear was that they won't be able to get decent values for those assets. But more recently, we've seen some of these disposals taking place above book value, which is a pretty good indicator. And certainly the South African portfolio is exceptionally strong. I also like the fact that it is a pure play on logistics and warehousing. So you won't necessarily get that in other property counters. And it's also a great diversifier because of that.
What do you like in the property sector? A player like an Equitas that is solely focused on logistics, or a more diversified player, your growth points, your high props, your redefines gear?
I think the sector as a whole is truly undervalued, even though it has run since the pandemic. What I truly like about Equitas, as Chantal said, is that it's a pure play on logistics. But what I don't like is a management team who are always ready to do deals. So I'd move into more diversified and more heavyweight player, which has office space as commercial property as well as retail property, such as a growth point, maybe a redefine, because occupancies are coming back up. I think as well as yields are also looking quite attractive, and valuations also look very attractive in that space. As I said, you probably want more diversification because a management team like Equitas are just deal makers. Sometimes deal makers in property don't really get it right sometimes.
And let's change gears to the gaming sector. Chantal, is Tsogo buy at these levels?
Tsogo is very cheap at these levels, but I won't necessarily say it's a buy at these levels. So what Tsogo's been contending with is we've seen the same thing in Sun International. I think what's helped Sun International is just that they've got this resorts business that's really benefiting from higher tourism. But in Tsogo specifically, the casinos, the old school casino where you go and sit and you throw in your coin and you gamble, has really been pressured by online gambling. And even though Tsogo is involved in online gambling, it's a small part of their business. It's dwarfed by the sheer size of that casino business. So I think that they're going to have to manage a transition towards more entertainment driven kind of offerings at their properties, as opposed to, and kind of countering that drop-off in casino revenue, which I think will persist, particularly if we continue on this path of online gambling essentially being quite loosely regulated.
And just on that, let's get your views on Sun International, that new CEO who has experience with the global gambling and betting market. Is this a counter you are watching closely at the moment, Gia?
I think it's one of the hidden gems, just looking at how much disposable income actually goes into gambling at the moment. And I really think what Chantal said is that Sun International moved very quickly into online through Sunbet. And that is essentially a first mover advantage to have such a great brand behind this loosely regulated online betting space. Because I think with civilization moving the way that it is right now, people don't want to really leave their homes. They want to just stay on their phones, on their laptops playing. And I think Sun International has had that first mover advantage. But what they also have is the resorts business, which is really coming into the fore, with the fact that there's quite a resilient consumer in the middle class. And I think Sun International is one of the hidden gems on the JSE that people should be looking out for.
And something thing a number of investors are looking out for is that potential Cell C listing. With that in mind, a viewer asking if Blue Label Telecoms is a hold at the moment, Chantal.
Yeah, I don't know. So it's still quite complicated, right? So they are seeking approval for this equity debt for equity swap within the Cell C stable. So essentially, Blue Label is going to take up more of Cell C, and then Cell C will have less debt when it eventually lists. And the idea is then that Cell C will be attractive when they actually end up having to put that stock into the market. Mm-hmm. They'll be able to raise funds, and then they'll continue on their growth journey. But there is quite a bit of execution risk in that. And Cell C as a business has been, it's been in trouble ever since it started almost, but they've always managed to pull a lot of capital into that business. I think the recent restructuring has been more successful than their previous attempts, and that's why I think that they're eyeing the listing right now. But without the hard numbers, it's very difficult to make a call on Cell C, and if I can't make a call on Cell C, I can't really make a call on Blue Label.
Yeah, and is there appetite for another telcos player on the JSE gear? I mean, we do have those quality telcos stocks, your Vodacoms, your MTNs, your Telcoms.
I think it's an ex-growth industry, and I think people don't want to pay for the services they use. They want it to become cheaper and cheaper. But I think the more interesting play, I mean, I was talking to a colleague this week that mentioned that maybe Capitec should go after Cell C once it goes and lists. And why he says is because you're finding that banks have these piggyback networks of which they have the distribution as well as the consumers who are able to get onto these networks. So I think when you look at it, it's quite attractive for many players. And I think if it came to market, there will be a lot of interest with people looking for those assets. But do I really want to take a play on Blue Label this year? It's really done well, and I think if you haven't been in it, you probably don't want to go in it right now because you are taking a bet on Cell C and management execution, and there's a lot of risk with what is proposed and the deals that the Levy brothers are proposing.
And that's really interesting because doesn't Capitec Connect, that MVMO unit, run on Cell C's infrastructure?
Yeah, I think it does.
Yeah. Interesting. All right, let's move over to Motus before we get into your stock picks. Chantal, is Motus not undervalued currently?
Motus is my stock pick.
Oh, snap. Okay, let's get Gears views on that.
No, okay.
I think the dealer market is really quite interesting space, and I think there's looking at where we buy cars has really done well.
Yeah.
I think what they have is more distribution across the South African space, and I think when you're looking at the valuations right now, Motors is very undervalued in my opinion. But it's not a sector that I find too sexy because I think I'm following where momentum is going, and you'll see in my stock pick. But if Chantal thinks it's a good sector, I'd really love to hear her thoughts as well.
Let's hear your thoughts then, Chantal. Why is Motus your stock pick today?
Yeah, so I was struggling to choose between Motus and CMH, and I probably like both at the moment. And I don't know if you saw the new vehicle sales numbers for September that was released by NAMSA yesterday. But new vehicle sales is pumping in South Africa. And the perception is there that it's all of these new Chinese entrants, right? But when you go and look at the detail, it's still brands like Toyota that are the most sold in South Africa, Suzuki, Volkswagen, Ford. And these are all brands that most of these new vehicle retailers and distributors are quite exposed to. Why I like Motus specifically is because it's got a little bit of gearing, which means that once you start seeing revenue coming through, you're going to see a massive impact on the bottom line. The market is forecasting about 5% revenue growth over the next 3 years, but new vehicle sales is up 20% year to date. So it doesn't make sense to me. There's a massive disconnect. Even on those very conservative assumptions, the stock is trading on a forward P of 6 times. So I think cyclically where we are, and just given the valuation, it's a good time to buy the likes of Motus and CMH. Will I hold it for the rest of my life? No, this is something you need to monitor. It's a cyclical stock. The cycle will turn. You need to sell it before it does.
I wonder if Chantal has done enough to convince you, Kia. You can take us through your stock pick while you answer that question.
She has a good story to tell. So what I'd say, my stock pick is actually a sector. I'm thinking gold stocks as a bundle. I mean, you could really play darts and choose one, and it would probably do well. And what I think is because of high operating leverage, we haven't really seen the effects of this higher gold price going into the bottom line. And right now, because they're very cash generative, I do anticipate that you'll see a lot of corporate action happening in the space, which also is going to affect the share prices of this place. So stocks like Newmont, Barrick, Offshore, even Gold Fields, Anglo Gold, Ashanti, I still think we're going to see incredible numbers in the next reporting season.
So gold counters as well as Motus, something to look out for. Kia, Chantal, thanks so much for your time this afternoon. That was Kearabilwe Nonyana from Prime XBT and Chantal Marx from FNB Wealth and Investments. Do remember that Stockwatch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on a Tuesday and Thursday, while Stockwatch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all from Stockwatch this week, but do stay tuned for lots more coming up right here on Business Day TV.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.